way to attract capital to a cooperative, right? Then it allows for community investor shares to have preferential treatment, which also allows for additional capital formation. And then, the virtual currency is, we measure six kinds of capital contributions to the cooperative. And we believe in this way we can effectively capitalize smaller opportunities than the current Silicon Valley system can do.
Can you say all of that once more, because I want to hear you deliver it a second time?
So the One Inc. Cooperative is a venture activist, and we have ventureactivist.co. It's a venture activist inside a California worker cooperative, allocating its patronage's dividends through a virtual economy empowered by a dynamic anecdotal information network. So that's the first sentence of my One Inc. Cooperative memo.
Okay.
And what I found.
So tell me more about the allows for payment on contribution over many years and the ability to raise capital versus a standard cooperative that doesn't have the ability to sell community shares.
There are three things that the law changed. It specifically allowed for worker cooperatives to allocate patronage's dividends according to their contributions, not their purchases. The second thing is it doesn't require the distribution of all your profits every year, which effectively sucks capital out of cooperatives in general and what has kept them small. And the third thing is it allows for a class of shares called community investor shares, which effectively enable institutional investors to put money into worker cooperatives. Those three things are critical in the law. And then the insight we had is that we can't know what somebody's contributions are worth when they do it, when we are all just contributing to the story. And so, but we record those contributions using the one ledger. And we're recording those contributions in different, with 6 different types of capital. And this story lends itself to a lot of the trends that are happening in today's world. And this gets to kind of 3 things: the rise of young millennial, kind of the young people being kind of worn out on capitalism and being attracted to socialism. Right? The other is sort of the winner take all aspect of the venture capital system. I call it the Silicon Valley governance system, which I've written a memo about. And the third thing is the complete neglect of human rights in terms of privacy and data collection and those kinds of things. And this structure, if you housed Y Combinator in this kind of structure, you'd get a completely different result. For example, Uber could be owned by the workers. And once you start thinking about different business models with this as the competitive advantage, you can see a big shift from the old system to the new system. And so I think the language, for me, like this, the short little thing of they've changed some laws. They changed the laws around worker cooperatives that enable better capital formation for these kinds of entities, and a virtual currency on top of Mythos. And then it's like, well, what's Mythos? And that's as far as I've gotten. But that's that's kind of my pitch when I'm talking to a friend.
Mm-hmm.
And if you just pull up my 1-8 cooperative memo, and let me just walk you through some of these things. Always scares me when it gets a little slow.
Mm.
So I found myself having to write little preambles to your memos. And so I started writing, you know, like, I think I wrote my own spirit check memo, right? I haven't written a citizen, I wrote my own Mythos 1 article. Click on that. We are building it on Mythos 1 and 1 technologies down below. Actually, Dynamic Anecdotal Information Network.
Yeah, I was gonna say.
Mythos. I don't think, yeah, okay. I haven't, like, the contextual augmentation aspect of it, then it falls apart. But the metrics of Mythos, click on that. Oh no, it was in the other article.
I know, I thought.
This I think you've seen. Is it slow?
Yeah. So I think, okay, so let's go back to this, because this, I just took what you said, which is also recorded, and I started to distill it into the format that we already know.
I'm good with that.
So you explained the opportunity first, then you explained the problem, which actually that's normal. So some of what you conveyed as the opportunity, I think, is the solution. And so the opportunity should be augmented a little bit. I think that distilling this, your memos in a vacuum, your memo on the cooperative doesn't make sense. It's not, it's
funny, I feel the same way about yours. But
well,
let's go look at yours.
So hold on. So the reason for that is that these are your
Right
notes.
Yeah, right, probably are.
So these are your notes that you created. This is a guess, but you're gonna find it comical why. I would imagine that you created this in the process of creating the cooperative legal agreements and like that whole process, right? And I can look down at when you edited it and say, all right, you know, created on, yeah, February 8th. So this is right when we started to have the cooperative structure and you went hardcore on it. What you knew in February is very different than what you know now. And the edits that you made last Sunday are probably small edits versus like the singular thing that made me rewrite my author page was that there was an error in the database, and for whatever reason my author page was the only thing that got reset, and so I rewrote it, and when I rewrote it, it was wholly different. So all of these memos that are linked here are, some of them are going to be relevant to this deck. And so my thought is that we take these bullet points that you've outlined, right, which are very, very, very high level and very cogently packaged. We take those and then we make a deck, and we make a super simple deck, both visually and linguistically. And then we write the deck to be as standalone as possible. And then we look at everything that we've linked in the deck and we build out the context. That's basically what I was doing early on with the Mythos deck. So I think that like what you've outlined here is the opportunity. These 3 bullet points that's it. Like that's the slide. So let's rewrite this in this format to be as standalone as possible, meaning that it will make as much sense as possible without clicking for context. And then once we finish the deck, we'll have a bunch of like memos that we now know, okay, someone is going to come to this memo from that. So let's build it for that person's experience. And so I would say let's focus exclusively on the deck for a bit, you know, and just like laying out the deck, and then we can build the context after. But your memo here of like One Inc Cooperative is a venture activist inside of a worker cooperative, it's more so One Inc Cooperative is a California worker cooperative allocated, and it doesn't allocate its patronage refunds. It operates for the benefit of the members. It does this by, you know, through a virtual economy and patronage dividends based on contribution, right? So you basically have taken what we are and you've inverted it because you've started from the investor perspective, not the member perspective, because you're you. So the way that my memo reads is quite literally the opposite. And that's because you're a different perspective. So for the deck, let's find whatever narrative works, and then let's augment it with whatever makes sense. So if we're augmenting something, an explanation of mythos, we'll augment it with my memo. If we're augmenting a virtual economy, that would be your memo. And then once we have the deck laid out and we have everything linked, then that's what I did in my mythos deck, is I tagged it like mythos deck hashtag. And then I literally had a stack of memos that I was just going through and like being like, okay, these are the ones that I need to finish in order for the deck to be robust.
Okay, so I love that approach. Now let's just talk about I'm just looking at your memo on which you copied here to the overview, and I think I'm comfortable with the language of a more ecologically aligned human experience as part of a big vision, and not as part of the overview.
Okay. So let's ignore the deck for a second and let's build it out here. So overview, it's going to be a member-owned, member-controlled corporation.
It is a corporation.
Yeah, I've been changing that from organization to corporation. All right, so it's a member-owned, member-controlled corporation. Members contribute capital and receive something like that. So capital, so like types of capital. So like this is the type of augmentation that I'm thinking in the final deck. So like patronage, one of the things also that I saw, where did I see this? Oh, it was on a book on Taoism that I found in the Joshua Tree place that we were saying, is that they did this thing where they would write something like this, right? So patronage refunds. Can you look at the screen for a sec?
Yeah.
So they look at patronage refunds and they say patronage refunds parentheses. So basically this is the language, this is like the broad language, and then they would basically add a parentheses to just do like plain language.
Yeah.
Because it was like spiritual. So I really liked that format because I think that there are a lot of places that we can use it.
I agree.
Okay, so a member-owned, member-controlled corporation, a California Workers Cooperative. Members contribute multiple types of capital and receive patronage refund or dividends. Okay. What's a third bullet for the overview?
Me left.
I don't really want to put the Y Combinator of the future, but something like branded venture capital. A branded venture capital startup studio.
No. I'm not, the second bullet is the one that's tripping me up.
Members contribute.
Yeah.
So this is an explanation of the first bullet. So as far as an overview, that would probably go here.
Yeah.
So then what are we not including in that first bullet?
I'm looking for
economy.
a virtual economy.
Okay, so how do we make that sound not like a blockchain thing?
So, worker cooperative. The worker cooperative allocates its patronage and dividends, and that's where I go. So the member.
So the thing that I'm thinking, that because of coronavirus, the thing that I'm thinking of is this. So chapter 7.2. There we go. So the contradiction in today's economy in which the service of material goods is coupled with the glossy and equal, blah, 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 or this feedback cycle leads to an economic recession. There we go. They worked so well that one of the leading, they're talking about a local exchange trading system. They worked so well that one of the leading economists at the time, Irving Fisher, advocated the stamp script demurrage system as the way out of the Great Depression. Basically, if you keep reading this, FDR, like there were places where local exchange trading systems were outlawed because they wanted to take over ownership through big banking systems, and FDR won with the New Deal. Here it talks about the New Deal, won with creating a centralized bank and like top-down engineering and yada yada. So you look at the economic system now, like the stock market is crashing. You know, the government is trying to prop up the economy with like, oh, we're gonna like, you know, free up workers' taxes on their income to offset this. But it's like, again, it's this centralized propping and propping and propping. And someone reposted Buffett's when the tide goes out, you get to see who's swimming naked. So all of that has made me think of these two paragraphs in Ascent of Humanity, which is that a local a harbinger of the convergence of crises occurred in 1930s, and basically the response was to create a local exchange trading system named emergency currencies in the United States. They incorporated various of the features described above and rejuvenated local economies wherever they were instituted. They worked so well that one of the leading economists advocated that it was a way out of the Great Depression. The correct application of the stamp script would solve the depression crisis in the United States in 3 weeks. Other economists agreed, but pointed out to Treasury Undersecretary Dean, whatever possible decentralizing political effects. President Roosevelt responded by banning all emergency currencies, choosing instead the centralized solution of the New Deal. That passage to me is like what is happening right now. Like we are creating a local exchange trading system in an emergency.
Yeah, so I guess that get to me is like all of that. I totally agree with that. I've read that a couple times. So remember, we're a California worker cooperative. So I don't even know if we need member-owned, member-controlled corporation, right? Because that's sort of defined in worker cooperative. So let's just start with we're a California worker cooperative. And then the question is why? And what are we doing?
Okay. So
And that's like, and then, you know, and this gets to what are the kinds of projects we're going to do? What kind of revenue will we have, right? We're initially going to start with, you know, it's like we're going to build a community, and we're going to have revenue from the community. We're going to bring money in from investors, and we're going to invest in people in the community, right?
so what I'm thinking of is this also from A Sense of Humanity, this passage. For ruinous civilization is built on a struggle of good versus evil, then its healing demands the opposite. Self-acceptance, self-love, and self-trust. So that's actually the things that I was thinking of for the next 3 themes for Symposium. I think that you said, what are we doing? And the first thing that came to mind is not this like grand change the world. It's self-reliance.
I went there too. Our mission is to enable our members to become self-reliant. That's it. And then the rest of the stuff, you gotta like, yeah, those words can be in the second level.
So forget the context for a second of the pitch deck. Does this seem resonant to you? I mean, first bullet point, I think we agree on, this is a frame of truth. Is it the highest frame of truth? Because like the more ecologically aligned human experience thing is like super pie in the sky, and it feels like it contains this. This feels like it's a little bit more tangible.
Yeah, I'm trying to be more tangible.
Yeah.
So our mission is to enable members to become self-reliant. And the question is, how?
Local exchange trading system.
Yeah, so that's the next bullet. So that's a worker cooperative. The mission is to enable our members to become self-reliant. And, you know, I think we're financing micro projects. Something, I don't know. I'm just resetting this stupid iPad because it keeps getting full.
I like this. So just reading these 3 bullets in line.
California.
California Worker Cooperative. And so this is what we are. This is, for those who don't know what a worker cooperative is, that's just added context. We're on a mission to enable our members to become self-reliant. We're doing this by building a virtual economy through a local exchange trading system known as One Ledger. That's more for our context than theirs. Financing micro projects and making space for branded venture capital, a branded venture capital startup studio. So basically cooperative, capital exchange, cooperative design for self-reliance, capital exchange designed for like self-sustained projects, and then branded venture capital. So that to me says venture activist.
So now let's talk about branded venture capital for a second.
Mm-hmm.
Why are you searching there?
I just want to see what's out there. The only place that I've ever seen it is in Richard Branson's autobiography.
To me, it's less about branded venture capital in this case than it is about, you know, I hate to say it, the democratization, right? Like, people can contribute without capital.
Yeah, but no, it depends on your definition of capital. So people can contribute without financial capital. They can contribute with other forms of capital.
Yeah, so then where I started to stumble, like thinking the next couple steps ahead is, all right, we raise $1 million and this gets to the model, like we got the revenue side of it. And then it's like, okay, well, this thing really needs to hire you, me, and Nick to build this.
Sounds like it's jumping away from the conversation that we're having.
Yeah, but then it's like, well, what are we going to do is the question.
Let me reframe that and say, what do you feel is not answered by this? Because it feels like you're asking, it feels like that question that you just asked is a challenge to your resonance with this bullet point. So let's focus on this bullet point.
Well, no, I was, if you remember, I started by questioning branded venture capital.
Right. So you have conveyed on multiple points a not whole resonance with Startup Studio and branded venture capital. You have offered, if I'm correct in making this comparison, you have offered venture activist. I believe that all of those things say the same thing. So I think it's a matter of which one we choose for this particular audience in this particular medium. So how about I say making space for a branded venture capital, Startup Studio, venture activist, and we leave it like that until we get further through this, and then we can cycle back through, and on the next iteration we'll have more clarity.
Okay.
Is that like I mean, it sounds like all of those things are by and large the same energy. We just haven't figured out the thing that's like the thing yet. I'm totally good on not putting down roots in any of those three terms.
I'm good with that.
Okay, so overview wise, as a general structure of the story, worker cooperative, local exchange trading system, something venture activist. That's the overview. Is that comfortable with you, those three energies?
Yeah.
Okay, beautiful. I like that. So then the opportunity is now with this third bullet of like we'll say that like it's like structure, exchange, capital. So it's structure, exchange, capital, give or take. So then the opportunity is basically repeating that in reverse, which is saying a venture activist, so we can define that and say, by financing micro projects with, then we have the ability to make space for contributions, and those contributions are rewarded with the patronage refunds. Does that sound like so first slide is overview, the second slide is basically like repeating the overview in the opposite direction?
Yeah, exactly. And your words around the third bullet point of the overview are helpful.
How would you, as an investor, how would you define dating before you get married? So basically financing micro projects enables.
I made the simplest resonance share agreement. If you go to my mythos again.
So that's the resonance share agreement is the mechanism. How do you describe it without the name? Like what's the financing micro projects enables?
Agreement in a community of trust.
Oh, yes.
So we've mapped.
enables for simpler, enables for formation of simple agreements in a community of trust. I love that term, community of trust.
And that's the key. Like, none of this works without a community of trust.
Yeah.
And that, just like flip over, just so you can have the experience, flip over, because I realized, like, I'm trying to engage Jeff, and I call him up and try and get him to help me. And then what I realized is I should make space for me to help him. And so then I made a resident share agreement where let's meet weekly. And this is sort of what worked with Dan. It's sort of what works with, you know, like, you jump into their Slack, you know, show attention, you develop these relationships. It's so confusing, the John underscore, and I recognize, I get it.
So, all right. So back to the deck. I hear you. I'm just skipping over it because bullets. All right. So overview, bullet 1, 2, and 3. Opportunity, bullets 3, 2, and 1. So basically, opportunity, we're saying the same thing in different language as the third bullet here. Then California statute allows, that's basically saying how we're doing the virtual economy using the statute change. And then bullet 3 is basically, I think that we can do some, we don't know what a contribution is like. So, I want to reframe this as like,
I don't like it either. So the point here is,
well, I want to reframe it
today. It's basically, you can plant seeds today that you harvest, you know, in time, you know, in the future, without knowing when.
So what I'm thinking is that the reason that, so I was talking to Matt earlier, and I was like, yeah, so like, because you're getting us featured in the New York Times, like, you'll get resonance dollars, and then you can exchange those resonance dollars with John, who might help you do your books, or like create a financial model for you, or advise you on long-term like finance strategy. And John's time to do that is literally something that you cannot pay for. Not that it's too expensive, but that he's not selling it. Which means the only way to get John's time, like, and John is this like figurehead of finance, just made that up, I like it, is like the only way that you can get access to your time is through this mechanism. And same thing with Will, same thing with Mark Golston, same thing with Jim, same thing with, like, you know, you go down the list. So what I'm looking at for this third bullet is that the make a contribution, the contribution gets documented, we figure out how much the contribution is worth later. That's the mechanism, but the outcome of that mechanism is that people like you, like people with substantial experience and posture, like substantial individuals, are contributing openly. And I don't yet know how to convey that in a deck, but I feel like that energy is the third bullet on the second slide.
Yeah. This is closer, and I think we'll figure this out if we take a step forward in terms of, all right, let's say we have money, what are we going to build? And then, yes, I'm weakest on both the third bullet points.
Okay, so something like this, the open contribution format i.e. the documentation and later quantification of value, inspires abundant giving. Something, that energy, basically. Does that make sense?
Yeah.
Okay. So you were saying, if, like, when we manifest the capital, what do we do with it? Is that a question for the use of funds?
Well, yeah, maybe let's go there.
Okay. So, development, purchase and development of Mythos. And I'll say, I'll just use this word for now, implementation of network effects, within existing living system. Scaling of immersive nonlinear storytelling, advertising, development, creation of say one platform, light, so
Well then, yeah, and then like, so that's like, what businesses are we gonna build? So then we also need sort of investment capital, right?
say the last part again.
Well, we also need investment capital, like money to put into future endeavors. Capital to invest in citizen projects, right? That further.
I don't think we need it. I think it's a nice to have. I think that building out Mythos to be used, like Sam is using Mythos to sell gatherings that pay Sam's rent in a way that he would not be able to do without Mythos. And I think building out Mythos and bringing more energy into that system means that we can allow Sam to more effectively pay his own rent, right? So I think that the investment into Mythos and the investment into scaling immersive nonlinear storytelling, aka advertising, I think those two things do what you just described. I think we can do more of that as well. So like basically developing Mythos, scaling advertising, and building out the one platform all are reducing the bottleneck of me and making it so that this is more and more a living system. I think we can go further than that, but I think for the use of funds, those are the top three. Everything else is kind of like they all are doing the same thing, which is making the system come alive. Like we figured out how to create a living system. So every step we take has a compounding effect of making like, you know, you and is it Michael? No, I think Michael, that your dev friend who like threw up the idea about the Alexa app, and then like you responded to it, and then nobody else responded to it. And I was talking to Sam about that, and Sam was like, yeah, I did, like, it seemed like a cool idea, but like just didn't really connect. And so to me, that's the living system saying, cool, I see that, that's just not resonant. Like, there's no rule that says that we shouldn't do a project like this. There's no rule that says, like, I mean, like, it's a good idea if someone knew the superintendent of a large school district and could walk up a pitch deck into a school district, then it would, you know, fit the bill. But it's kind of just missing a few pieces, and no rule said that that's not a good thing. The community just kind of self-sorted it as being like not resonant by some description. So I think that for me, I would like to convey this notion of like, we've built this as a living system, and the funds are to continue to build the living system.
Right, and so now its revenue streams are use of funds.
So
now
I'm going to put another thing down here that's revenue streams.
So we start with membership.
Membership, technologies, let's say saleable technologies. I mean, one plus includes Bot Boutique.
So what instead of saleable technologies, that's people paying, what are they paying, platform fees, or what are they paying?
For saleable tech?
Yeah.
I mean, worst case scenario, it's a service. Best case scenario, it's software as a service.
And then also, like, so what's the third thing is really what you call it, brand activations.
Yeah, so brand activations and sponsorships. Memberships, and trying to think of
then
like
it's
masterminds.
Also, you know, and then short term, then long term, it's the value, the equity, like as something that's incubated by one. What'd you say? Incubate until
incubate until self-reliant.
Yeah, so then it like something that's incubated inside one will hold equity in, one will hold some form of equity in all of its projects that that will reconnect, you know, sort of with the existing system.
Right.
So it's like
that's the branded venture capital mechanism.
Right. So so the revenue stream, what are the revenue streams of a VC firm, right? Well, they have the membership, they take the management fee and then the carry. So that's what it is, the carry.
It's called a carry. Wait, what's the difference between a carry and a management fee?
A management fee is 2 and 20. So when you say 2 and 20, 2 is 2% of the $100 million fund is our $2 million to pay the people to do the work. And then the carry is the 20%, which is we get 20% of the upside after you get a certain return. So here it's membership fees and then the carried interest in the project we support. That's it. Third one. Make another.
So pausing on that for a second.
It's the carried interest.
Let me reflect something and then come back to that. So I sent a thing to you yesterday, which is an episode with Judy Estrin, one of the 4 co-creators of TCP/IP, yada yada.
Yeah.
And she talks about how in the early 90s we started with open systems infrastructure, where you were rewarded for how many things you could connect together. And now with AI and social media and yada yada, we've reverted back to vertical integration, where the value accrues to the integrator. And that is how Silicon Valley works as well, which is that like Facebook, and so on and so forth, like the value accrues to the integrator. What you just described, the 2 and 20, is that system of the value accruing to the integrator. The difference being the integrator is a cooperative that everybody owns.
That's right. That's exactly right. That's the key thing. That's why it's the 4th revenue stream.
Yeah.
And then now I'm going to give you a couple more. We're going to take fees on the exchange. No. It's the carried interest on the projects we support. On the projects one supports. So then there will also be a, we're going to make money on 2 marketplaces. There'll be a marketplace for residence dollars, and there'll be a marketplace for community investor shares. Fees from operating the exchanges. No, this is a 5th bullet. So this is exactly
okay. So here's what I'm seeing. Bullet 1, taxes. Bullet 2, GDP. Bullet 3, it's the voice of a nation. I don't know how to define that one, but the voice of a nation. Bullet 4 is like basically the economy. So I feel like those should be reordered. But so basically you've got taxes, economy, GDP.
Yeah, the analogies you're losing the clarity of the language with the analogy.
Well, but I'm not intending to have it be clear. I'm kind of just it's for you and I to convey a general resonance of language. So because the comparison is there, right? We're building an economy. So memberships or taxes, that's pretty easy to compare. What we produce as a nation, if you look at it that way, is the technology for now, but we also have a bunch of other things that are coming.
It's technology and content. Yeah, that's. Experiences. There you go. Then those are all subs. And then there's partnerships. This is partnerships. And then we get a carried interest on the projects we support, and we'll also be making fees from operating the marketplaces of the economy. This is so far out there.
Yeah, but the fact that we've done it, we're just explaining what we've already created. Okay, so memberships, products, partnerships, and
I don't know why you're still separating out.
Like this. So I'm just doing it for the sake of language simplification for notation.
Are projects ventures?
Same. Like my point is that like all of these things are saying the same thing. I'm just having a parent classifier so that we can put everything, like grabbing the largest possible container of language.
This makes a lot of sense.
Yeah. So memberships, products, partnerships, projects. I feel like the marketplace is within the governance, and I don't want to put governance on this list for some reason.
Well, I don't, if you look at it as governance, I agree. My different frame on that is, I mean, we traded $7 million a month worth of.
What was the fee that Second Life took?
Well, the fee structure was critical to its success. And that was, we would charge basically a little bit more than our merchant account interchange fee, call it 3.5%. And then to the seller and 30 cents to the buyer.
Okay, so here's the difference between Second Life, well, I mean, pretty much everything else, and one, which is that you said we were taking, right? And that's what you just said. The difference here is that the we is us.
We are the people.
We
the people are taking, we're taking it for the people to.
Yeah, and so because the we is a cooperative that all of those who are exchanging own it, then the vertical integration into the cooperative seems to take on a different energy.
I lost me.
Because in a vertical integration system such as Facebook, where everything goes to one entity, the value accrues to the integrator, Facebook. So when all of this data is being collected, the value of that data compounds for the integrator, right? And that's over the last 10 years, that's what we've seen happen.
Yeah, and
the difference here is that it is vertical integration, which is the old system of finance, Silicon Valley. But the new version is that the integrator is a cooperative that we co-own. So we can use the system that we know compounds value, which is vertical integration. But in doing it in this frame, we prevent what has happened with Google and Facebook and yada yada. So we become stronger because we're us.
I agree, and so those are the revenue streams.
Right.
Are you comfortable with marketplace now?
Yeah, I am.
Maybe. All right.
So I'm gonna move this.
Now the use of funds. So where are you moving that?
Because it feels like it's a business model slide.
Fair enough. So then, in use of funds, like another key thing that we're not conveying is how low our burn is.
All right, I appreciate that. So traction.
So no, traction goes after business model.
Is it?
Yeah,
not in the book I read.
Not in a book I read. So here, no, use of funds, that's where burn goes.
Really?
Yeah, our operating cost, it's cover operating costs is what you didn't put there.
Yeah, okay.
Yeah, and that's why traction is, I mean, honestly, this is the metrics of one.
That memo doesn't feel like it answers this question, but it feels like the intention of that memo would.
That's correct. So the data I don't have that I would put there, that's the data I have. The data I don't have that I would put there is attendance at events and the size of our CRM. And then
Neither of those have any kind of history.
what?
Neither of those have any kind of history.
Well, don't people buy tickets on Eventbrite? We used to pull the data from Eventbrite for General Assembly.
As I've said many times, it's if you pull any data that is comprising the system that we are presently looking at, the number of asterisks that go next to each number is significant.
Brian, that is true for every business I've ever pitched. And that is an excuse that people use not to show the data they have.
Okay, I accept that frame.
I've never been wrong about this. I've never been wrong about this. Either like if you're like I'm thinking of all these examples of you still put numbers next to each other and observe the trend, even if it requires explanation.
Okay. You know what I want to do? You know what I really want to do?
What do you really want to do?
I want to fucking
yeah, you really want, yes, your timeline. I just
because think of like this fucking thing, right? And then sure, red. Okay, so then it's just like creates viral art, you know, yada yada. So like we can compress it, but I'll do a new memo that's like timeline of 1, emergence of 1.
Can you add me? Oh, we both can't edit at the same time. Yeah, add a timeline. That's wonderful. Now I want you to add in a structure. Add in I was getting nervous about more ecologically aligned human experience and kind of the grandeur of that versus the practicality of what we did today.
Say that one more time.
I was nervous about the grandeur of a more ecologically aligned human experience relative to the practicality that I wanted to get at today.
Do you feel like we've been being productively practical?
Yes.
Okay. I appreciate how effectively we've learned to work together, because you poking at my anxieties around metrics and me poking at your going down rabbit holes and staying at this level, like we're really fucking effective together after a year of practice.
So here's the thing. Now I want to get to after use of funds.
Yeah.
This is the ask.
Okay.
And we're going to sell 40 units at $25,000.
What's a unit?
A unit is a community investor share.
So let me ask you this, because I've been wondering, so the cooperative is raising, we have the legal ability to sell up to 49%. Are we raising a note? What's the actual structure?
Yes. This is exactly what's next on my thinking. And last night, I think we're going to sell community investor shares that have these characteristics. Right? The community investor shares have the characteristics of an 8% return prior to the distribution of any patronage dividends to workers. It's accrued. And that's as far as I've gotten. But I've got to write. My next step is to write the legal agreement for this sale.
Okay, so the two things. One, I I like the story of 40 units at 25 because that, in my mind, paints a picture of me telling the stories of 40 people like you. And I would much rather do that than talk about how a fund gave us $1 million. I think that that's more resonant with the story, and I think that that's the best story. The question that I was asking previously that you helped to clarify is, what's the valuation? Like what's the mechanism that this money is coming in, and does it place a value on the cooperative? Are we selling 100% of those 49 shares that we can legally sell, or are we selling an allocation? Like, have we gotten there yet? Like,
yeah,
I understand the intention of the money coming in. I understand how that money
we're good. This is the edge of the thinking right now, and I have to do more reading.
Okay.
But what I'd like this to be is it's a series seed of the cooperative. I'd like to imagine us selling about 10% of the cooperative, which is
so you want to do a fixed note, not you want to do a fixed raise, not a note.
Well, I think we can and should.
What do you think is the value of that versus a note? I mean, this is very new territory.
The reason I think it fits with the story better, because the note converts when some big investor comes in, and that's not what we want.
Oh, yes, good call. Good prompt.
So that they're not 40 units, they're 40, it's 40
people.
It's 40 blocks. So here's how I'm thinking of it. We have 10 million community investor shares, and we're going to sell 1 million of them now at $1 each.
So a $10 million valuation.
Effectively.
Okay, so $10 million post money. And then that money acquires Mythos, that money acquires the intellectual property and people of Mythos and OnePlus, aka me, Nick, and you. And then we develop the platform, and then we basically would sell 1/10 of what we have the ability to sell.
For now.
I don't have an objection to that story.
Exactly right. And so there's another thing that I read that you should be aware of, is that entities cannot be citizens. They can be citizens, but they can't be worker members.
Interesting. Why is that?
Because a worker member is a natural person. Natural person is the legal term, because corporations are people too, as you probably learned, but corporations are not natural persons.
So then I will rejigger the ledger for yeah, got it.
They can be citizens. They can be citizens, but they can't be worker members. So they're corporate citizens.
Well, what do you mean by that?
Well, I don't know. I'm making it up because I recognize we want companies to be able to be citizens. They can't be.
Do we? Yeah, we do. Well, so here's the thing. So Deepin, for example, if Deepin pays $5,000, if Deepin makes a contribution of $5,000, and One Inc provides technology services, and then the resonance dollars accrue to the founder because the founder is a person, then the value of her ability to convey that her company has assets in the form of would be limited.
I don't know why you went there. I can't connect that to what we were talking about.
because Deepen is making a contribution from Deepen's budgets, and Deepen is founded by Christina. If an organization can't legally be a member of a cooperative, then it would make sense that the founder would be the member. But if the founder is the member, then the residence dollars go to the member, which means that the organization Deepen is putting their budget in, and Christina, the individual, is getting.
Oh, that's a problem. That doesn't work. So I largely do think it's a little bit of a semantics issue.
What's the statute? Like what is the actual language?
It is as simple as worker members are natural persons.
What does natural persons mean?
Okay. So do you remember Mitt Romney saying corporations are people too?
Yeah.
All of our law is based around that corporations have the same right as people.
Mm-hmm.
Okay, there's a couple places where that isn't true. Or there's a couple places where organizational structures require you to be a natural person. And so, for example, an S Corp cannot have a corporate owner. An LLC. So all the owners of an S Corp to be natural person.
Hear me out. I'm about to say stuff that should be coming out of your mouth. So bear with me for a moment. The cooperative has its own system of governance. So the container that we live within is a California workers cooperative, which is within the United States government and within the California state government. Within our cooperative, we can have our own governance. That's what the bylaws are for. So if an organization like Deepen makes a contribution, those organizational contributions by the nature of our bylaws can be required to be associated with an individual, such as the founder, aka Christina. And then also in our bylaws, we can state that no organizational contribution may be dispersed without the acknowledgement of all stakeholders associated. So basically, legally, Christina holds the R dollars in the United States law, but within the One Inc. cooperative governance, Christina only holds them. She must get approval from her board to use them. So meaning that like we can't give Christina anything without Christina's stakeholders' approval. And we do that on our governance side.
This is a little bit of a rat hole for now.
Okay.
So I'm
gonna add a section for questions.
Entities can own the community investor shares.
Yeah, but we don't want to give those out for work.
Well, here's the real funny thing about all this, Brian. That the community investor shares and the residence dollars are basically both, together they own 100% of the cooperative.
Correct.
So that's like something that isn't said anywhere, that isn't like, might not be perfectly clear to everybody. Mm-hmm. So let's go back as a worker, go back to the top.
Mm-hmm.
A member-owned, member-controlled corporation. Okay, so now scroll back down. Okay, so this is the ask. So we're, join us as a community investor. And the community investors, so this company, okay. So shares of this, just let me say this isn't for writing. Shares of a traditional corporation, common stock, preferred stock, etc.
Mm-hmm.
They own the rights to the future profits of the corporation. Same thing, residence dollars and community investor shares own the future profits of the cooperative. That's sort of self-evident, right? which also says that, like, yeah. Anyway, I digress. No, natural persons. So entities, where you say questions, that should be entities are not natural persons and so therefore cannot be worker members. Say that specifically.
Wait, say that again. Organizations are not.
No, entities. Organizations is not a word.
Entities are not natural citizens.
Natural persons. Natural persons.
Got it.
And therefore cannot be worker members.
I drew this. I don't know if you can see it.
So is it
basically a chart of dispersions? So it's like profits get split based on, and then we basically on the left side of this we say like, so our dollars are presently 90%, and can be as low as 51%.
I'm not sure that 51% is true.
Should be.
I haven't found it anywhere again. And here's why. I think it was in the old language, maybe, of consumer cooperatives, and here's why. It's like, because worker members are people. People can only have one vote. The people vote on everything, and community investor shares only vote on these things. So the percentage of ownership is less important.
So let me ask you a question then. If you could manifest an abundance of financial capital, the snap of your fingers, and you could dictate what type of capital that was, for the purposes of what we intend to accomplish in 100 years, which would you rather have on owning the equity of the cooperative? Seems our dollars is the answer, no? Like if we could bring in $1 million with our dollars, that would seem more beneficial to everything.
I agree at present. I don't think there's a difference.
There is a difference. There's functionally a difference in our articles of incorporation.
Yeah, but down in terms of.
Okay, so pause for a second. What if we had preferred R dollars versus common R dollars? Because it seems like that's what the community investor shares are.
Well, the preferred R dollars are the ones that were paid for with real dollars.
So then what I just heard.
That's just R dollars that were purchased natural capital. And what we don't know is the exchange rate between all the different kinds of capitals.
So what I just heard is that R dollars are given for all types of capital except for financial. And then community investor shares, aka preferred R dollars, are given for contributions of financial capital. So then Deepen's $5,000 would be in that.
No. Deepen's
I'm not saying with certainty. I'm saying like theoretically.
Yeah, so there's worker members purchasing our dollars is great. Worker members kind of earning residence dollars, that's great. Corporations paying one is revenue. So Deepen's $5,000 is a partnership on the revenue stream.
Okay.
For sure.
Okay, so then.
There's no residence dollars there. They're just paying the co-op to get this work done.
Okay, so then capital in, hold on, let me grab a bigger piece of paper. So then capital in is split of basically it's split with a singular question, which is, are you requesting anything for this capital? It's kind of like that, right? So if you're putting in capital for the sake of putting in capital, then you're buying R dollars, which are preferred R dollars, AKA community investor shares. That's what you did. If you're putting in money to get a benefit, which is what Deepen would be doing, you're buying a service, that's revenue.
And exactly, and they can buy either one. They can buy both.
Right, but I'm specifically pointing at you're putting in capital and asking for a specific thing, or you're just putting in capital to put in capital. Nick is putting in capital so that he can be sustained by the community. He's not putting in capital in any one place for any one specific purpose. He's putting in capital to get a return, but not a specified return. Deepen wants a specified thing. They have requested a specific action, so that's a service, and those services are profits. So basically, I'm building out a tree of services.
Yeah, I like where you're heading. I got to wrap up because I have another call at 10 and I have to return a quick call. Okay. Another call at noon in 10 minutes. The place where I think you're heading that I want to help you avoid is don't confuse residence dollars with community investor shares because it gets too complicated.
For the sake of conversation, it seems like it's easier. For the sake of outward discussion, it feels like it. I agree. Like, I agree with that, but I feel like R dollar common versus R dollar preferred.
We can call our community investor shares R dollar preferred. I get that.
That's what I was intending. Okay, so then this is my little chart, which is, so basically, so capital comes in. If it's requesting a service, then it's a profit. If it's not requesting a service, then it's a contribution. If it's a contribution for the interest of dividend, then it's a preferred. If it's a contribution for the interest of participation, then it's common.
That last part is the part that leaves me going, wait, what?
You put in financial capital not for a service, so that is an R dollar purchase, and you put in capital because your core interest is a return, and we offer returns in the form of dividends. So if you want a financial return, then you're buying an R dollar preferred share, which gives you a dividend as dictated by our bylaws. If you are not seeking a financial return, then you're common.
Does it mean that R dollars that are not common R dollars cannot be purchased?
That's kind of what I was thinking at the beginning of this. Yeah.
Let's let that be for a little bit.
So theoretically, money in is either a service or a purchase of preferred R dollars. Theoretically, and then all other forms of capital contributed are R dollar common shares.
You know, this makes a lot of sense. This makes a lot of sense because if we took the company public, then it would all merge to one class of shares again.
You know what I'm realizing? If I draw a line here, so I drew a line between common and services because obviously you're earning R dollars by putting in natural capital. The natural capital is applied to the services. That's a flywheel.
Yeah. A little weird.
Why is it weird?
No, that's good. Okay, I feel
this was super productive.
I think it was super productive. Then it's like, what are the revenue streams of Y Combinator? And can we look that up and draw the same picture here? So, all right,
all right, you do your stuff. I'm gonna dig in and do stuff. And this was awesome. Talk to you soon.
Okay.
Bye.